Hey everyone, welcome back to your weekly market outlook. This is for the 23rd of September 2024. So let's get started with a quick recap of a very busy week. Last week, obviously, we have a lot of central bank announcements. Number one, obviously, it's the FOMC. So the Fed basically decided with a 50 basis points cut. Again, this is beyond what market was expecting. It is a little bit more on the aggressive side in terms of the interest rate cut that was given by the FOMC, stating that they do want to focus a lot more on giving room for the labor market to breathe. So we had the interest rate now down from 5.5% to 5%. In terms of economic projections, they're looking to cut even further in the next year, bringing the interest rate down to 3.4% according to their latest dot plot numbers there. That's for the economic projections. Everything else seems to be good. I think they are pretty much achieving their soft landing here. They do want to be ahead of the curve, and that's the reason why they given the jumbo cut of a 50 basis points. Again, the next meeting that they're going to decide on, it's not going to be in October. It will be in November. So I think that's the FOMC just giving the extra month ahead in terms of the interest rate cut there. Other than that, Bank of England sticks to their 5% rate, no changes so far. They're keeping rates steady here, again citing that the fight against inflation is probably not over yet. And also in terms of the Bank of Japan, no interest rate hike. They also mentioned that with the jumbo cut given by the Fed there, it changes a lot of the things there, brings a lot of uncertainty into the market, and they prefer to wait and see. They're not in a rush, and they are able to kind of collect all the information before making that decision. In terms of what the market is expecting, market is still expecting a potential hike coming up from the Bank of Japan in December. But again, comments coming out for last Friday was a little bit more on the dovish side in terms of the Bank of Japan there. All right. So this week, we're going to start the week with a lot of manufacturing PMI numbers. Again, this is going to be the flash manufacturing PMI numbers coming out from the Euro, UK, as well as the US. That's all going to be on Monday. And then on Tuesday, we're going to be looking at the interest rate decision coming out from the RBA. We're expecting no changes here from the RBA. They're likely to keep rates on hold at 4.35%. And again, in terms of when they're going to be cutting interest rates, we're not really that too dovish into reading the RBA's movement here. I think the earliest that we could get the interest rate cut would probably be in December. A lot of analysts are talking about potentially in the first quarter of 2025 before looking at the first rate cut coming up from Australia there. Other than that, we have the Swiss National Bank. Swiss National Bank again is expected to cut rate further by 25 basis points from 1.25 to 1%. And then we have the US final GDP numbers. That's going to be on Thursday. This week, we also have comments coming out from Bank of Japan Governor Ueda on Tuesday, as well as Fed Chair Powell. That's going to be on Thursday. PCE wraps up the week for this week in terms of the fundamentals. All right, let's take a look at the technicals here. I don't think there's a lot of changes in terms of what we are anticipating or what we have been looking in the past weeks in terms of the US dollar getting weaker and whatnot. I think we're still on track for that. The Aussie here is currently trading above 68 cents, and for now, I think as long as it's able to maintain a position above 68 cents, we still have more room to go for the Aussie USD here. I think this is still on track for a projection towards 69 cents. Taking a look at where the R2 is located, the R2 is at 127.2%. That's going to be at 69.20. In terms of the Euro USD, again, this is a little bit on the slower side, but we're still on track for further progression here. 1.12 is still likely going to be the cap for the Euro USD. Only a break above 1.12 that will open up further movement towards the next order block, which is going to be at 1.1250, 1.1275 level. In terms of the Pound USD is still on track. We have achieved the first target here. That's close to 1.3350. This is going to be our immediate resistance here. But in terms of how far the Pound USD could go, taking into consideration how the Bank of England is a little bit more on the hawkish side here in terms of them not really too aggressive in terms of cutting interest rate, does give a lot more strength into the sterling here. So I think for the sterling here, momentum has slowed down a little bit. We have achieved our target at 1.3350, but I think there's a little bit more room to go here. We might potentially test 1.34, 1.3450 in terms of the sterling here in the near future, as long as it's able to maintain a position above 1.32 1.32 and 1.3250. That's basically where the pivot is currently located. Worst case scenario for this one here on the sterling here, if there is that profit taking that we could see, we might see price dip down a little bit to test that 1.32 support, but for as long as it stays above 1.32, then I think a lot of bulls are still going to be tracking sterling higher here. All right, lastly is the dollar Japanese yen. If we take a look at the dollar Japanese on the daily time frame, this is a no-brainer that this is still a downtrend. However, the movement last week, we need to consider this. The bounce last week that happened on the dollar Japanese yen might look small, but it's actually 5 yen, about 500 pips in terms of the recovery. Now, that was a little bit more on the aggressive side there in terms of the bounce. Again, this is made worse by the Bank of Japan, being on the wishy-washy side kind of things, not really wanting to comment that they're looking into hiking interest rates soon or whatever not. Again, shifting the blame to the FOMC rather than anything else. So we had that last Friday, and the market basically took that and say, you know what, maybe Bank of Japan is not really in a hurry to high interest rate. That kind of put a lot more weakness on the Japanese yen. So we saw that recovery happen here last week. There was a really strong move in terms of the intraday, intra-week scale. However, if we take a look at it on the daily time frame, it's clear that there's actually still a resistance trend line capping further progress on the dollar Japanese yen. Definitely want to watch out 145, 146 range. Any failures at 145, 146 range, that could actually send a message to the market that, hey, you know what, even if there's a strong bounce and whatnot, in terms of the interest rate differentials between the FOMC and the Bank of Japan, it's still a huge difference there. So in terms of whether or not carry trades is going to come back, that's yet to be seen. We basically need to clear off a lot of the key levels, and in fact, for the carry trades to come back, we basically need to transition back above the Ichimoku cloud, basically meaning we have to maintain a position above 150 at least for about a month for the dollar Japanese yen, which is going to be a huge call, a huge ask for the market. It's very volatile at this point in time. So this week, we're definitely keeping an eye out on 145, 146. Any failures at those levels, then a lot of traders are going to look at that and say, you know what, it's probably not time to pick up the carry trade on the dollar Japanese yen. That could actually send the Japanese yen stronger. It could push the US dollar yen back down to about 141, 142 level again. All right, so with that, good luck to your trades, and I'll see you soon.